Good morning, everyone. I decided to do this live rather than a recording, and I'll probably start doing these. Good morning, Alex. Probably start doing these on a more regular basis rather than recording. So, as I usually do, several days during the week, I go through what's happening in the broader markets and a few stocks of interest. And you can see on my screen here several charts, of course. Broader markets are on the top there, always to see these ETFs as to what they've done over the past few days. And yesterday was pretty unusual type of day. And these are weekly charts that really don't give justice as to the craziness of what happened. And what's crazy, while these markets have broken lower from a double top here, the S&Ps and the transports having been showing relative weakness, this bottoming tail that formed the day before yesterday, probably, and I really don't have statistics that go back to give you a defined number. I just have my experience, and a bottoming tail bar in an area of support near a 200-day moving average. And this is close here. And then on the spiders was right there. For that not to follow through for at least one day, most of the time 3 days, historically is, just typically doesn't happen. And then to have the gap up and a complete engulfing reversal day, it's unusual. I've said that. Now, Dan, my partner, years ago, fondly used to call this type of situation a bull sandwich, I believe is referred to. So you had the bear sandwich and the bull sandwich, the meaning of, you had the bull in between the green bar and on either side, the big bearish bar. So I guess it would be the bear sandwich. The bear is going to eat the bull. And that's what that suggests, that it's going to move lower. So we'll see how much that follows through. And the Qs here have the room to follow through further. Reason being, it's further away from any real reference point of support. And you can see the Google here, that nasty, ugly day. And here, another 200 MA bottoming tail bar, prior low. Lower today. Well, let's take a look at the futures to kind of figure that out as to where they are going here. So it certainly looks like they're going to go lower. The markets are closed on Friday. So, there's always that hesitancy in front of a long weekend. How aggressive do traders really want to get in front of a weekend? And historically, wide range bars, and that's what we have yesterday. In these markets here, these bars, are they wide? Well, they are, but they've been wide kind of right along. So definitely the Qs was a wider bar, so more damage was done there, and a big wide bar. But historically, wide range bars are followed by narrower range bars, and a lot of times an inside bar. So today really could be a go nowhere day, which could set up what we call a 1, 2, 3 continuation pattern. So a resting day after the bigger day. So as I go through this, what I look at, we'll get to the futures, is what a wide range bar like that is to go down to the intraday timeframes. And I look for a couple of things, meaning as that wide range bar on the daily chart, did it decline into the end of the day, or did the decline happen earlier in the day and then it went sideways throughout the majority of the afternoon? When it's the latter, it sets up a higher probability of follow through to the downside. For example, look at Alphabet here on this day. Right? It went down in the morning. and then it went sideways. It attempted to hold at the bottoming tail bar, and it couldn't. So it had a resting period throughout a large part of the day. So that was a higher probability setup that it was going to follow through to the downside the next morning. Whereas yesterday in Google, the decline started first thing in the morning. It gapped up and just died and just continued lower all day. So, and this is another concept that I teach in Master Trader Technical Strategies, is that after a greater than 100% retracement, and here, and just really, I'm talking about right here, this move up and then all the way back down, greater than 100% retracement, you get a short-term period of stability. It doesn't mean that it's going to reverse the trend. To do that in this time frame, it would have to move above here. Thank you, Mike. It would have to move above here. And this is why this lends itself to more of a choppy type of consolidation day versus a follow-through type of day like it happened here. So concept being end of day base versus end of day decline. And as we always do, we put together multiple time frames. So I just take a look at the 5-minute chart here. And you can see this is what we call a power downtrend throughout the day. And these moving averages, just so you know, I set these up on the 5-minute, which is my primary trading time frame. So I'll use the daily and the 60, but the 5-minute is my primary where to enter. And the reason I use these moving averages like this is so that I know what's happening in multiple time frames without looking at them. And the way I do that is relate these moving averages, or actually set them up to what's happening in other time frames. So this 20 MA here declining, it just gives me a short-term view of the trend on the 5-minute time frame. It's going to, monitor this or stay with it relatively close. This green line is a 60-period moving average. And what that is the 20-period moving average on the 15-minute chart. And this red line is a 200-period moving average. Now, on the 60-minute chart, a 240 MA would be the 20 MA on the 60-minute chart. So the 200 MA is close enough, and more people look at the 200. So what I know in a situation like this is that the 5-minute obviously declining. The 15-minute is declining. And the 60-minute is declining, is rolling over to declining. So the odds are to the downside. Any reversal, bottoming tail, is going to be a low odds situation because I'm trading against the trend. So I'm looking for topping tails in this type of scenario. And I'm also looking for the fact that, or lack thereof, of that there's a void of support to the left. And that's what made this set up as a higher odds situation, that it was going to continue to go to the downside. Now, Amazon is getting beat up here today. Take a look at here's the intraday, or the 24-hour chart right now. It's beginning to drop here. It's down, well, I don't know, unless I look 30 some odd points or whatever. But you can see it's going straight down here this morning. So that is going to put some pressure on the market in the morning. Now, as you look at what's happening in the futures, let's see here, time frame, auto. Okay, so it's just chopping around here right now. It's chopping, going sideways. It's trying to find its footing near this area of support, but it fell really hard a little while ago. And it's just chopping here. And so let's go back to, and you can see the moving averages here, the way they're arranged. The 20 is up. The green one, which is the 20 on the 15, is up to rolling over, and the 60-minute is down. So they're not in alignment as they were when we were looking at Google. So this is a lower probability situation of calling the direction in the short term because of those opposing multiple time frames. Let's look at, And we see the support here, kind of like a head and shoulders. Now, these moving averages going to the 60 don't relate to any other time frames because they're not set up that way. Where I would just have the 20 on there. So this is now going sideways. So here's another concept. Big drop, little short-term extended to the downside in an area of support. It can't lift up. Right? Bottoming tail bar, right back down. Come up to resistance, right back down. So the longer this goes sideways here without being able to move back up, the greater the odds of following through to the downside and follow through to this move here. In other words, in an area of support, there's buyers or demand. And as of right now, they can't get prices moving higher at all, which again leads us to the bias that prices will go lower. Right? So let's go back to the daily for a minute. And this 200 MA is where buyers originally stepped up. It's in the area of this bottoming tail bar. And quite honestly, I saw this reversal on Monday and thought, wow, I was really hoping it would drop down here. That's what I wrote in the letter on Monday and have a great buy setup down here. But the put call ratio, option traders were loaded, to the eyes on Friday going into the weekend. And my assumption is when I see internals that extreme, that there is the possibility of this kind of reversal. But I was really hoping it would move lower. That didn't happen. And now after that reversal happened on Monday, I thought, wow, well, this should go up and attack this resistance area up here. However, the gap up was followed by selling right back down again. So really a example of a market I wrote a couple of weeks ago in a letter about the market being Mr. Schizophrenia. You can't trust Mr. Schizophrenia if you guys read that letter. And that's what we're dealing with right now. So it's a difficult market environment. You have to, as you always do, be patient and disciplined as to what your setups are. And that could be almost anything, as long as you've defined what the plan is in your setup. So, we've got the day off on Friday. So a long weekend, there'll be news, information to digest. But overall, looking at, the bigger picture here, all of this suggests a move lower, but we'll see. Now, corrections happen in one of two ways. They either happen through price, meaning prices go down, or time. So if prices do not follow through and they go sideways, let's just say they chop around in this area for a couple of weeks, well, then that increases the odds of being able to push higher because that sideways correction begins to create support, and the uncertainty created by this type of a drop begins to dissipate, and confidence begins to come into not so much the market, but market participants becoming more confident about the less likelihood of the market actually following through to the downside. So we'll see how that all shapes up here. And let's see if I can change this. No, I can't. For now, I have to change that so it shows me everything that is how much it's actually up or down pre-market. So, well, that's it, guys. A lot of things took a hit, like Twitter, which was looking really good, like it could go higher, and it got smashed. But I'd keep an eye on these because the ones that were acting in this way prior to the correction, a lot of times buyers come back to them later on when the correction is over. Now, these internals have gotten to the point where, it'd take a little bit more maybe to get breath down, and I would like to see one more move to the downside, whereas something like this, like a measured move lower and our internals lined up, could set up a nice rally from that point after a little consolidation. And that's what I'll be looking for, going into the next few weeks, and we'll see what after this holiday brings. So that's it for now, guys. We're going to start doing this on a more regular basis. Dan and I, we're going to start a chat room probably sometime next week. And we'll invite our subscribers initially and then open it up to others. And so I'll be doing these live market reviews in the morning on YouTube. And then, we'll just go to the subscribers in the room and post our trades, option trades, swing trades, gap trades, and so on. So hopefully, you'll be able to join us there. All right. So good trading, everyone. Let's see how this day unfolds.